Hey everyone, so Monday afternoon now. It is April 14th. I'm coming at you live from my studio, my little quarantine day trading studio here in beautiful South Florida. But I wanted to go over today's action and last week's action basically in the S&P 500 and in the broader market. So in the big picture, we are right off of the lows here at 218. This is the weekly time frame, by the way, so each one of these bars represents one full week. So for the last 3 weeks, not including this week, but for the last previous 3 weeks, we have made a very impressive bounce right off the lows, over 25%. So despite the horrible news, despite coronavirus, despite the thousands of people dying every day, not to sound morbid, but there's been so much bad news. Not nobody, but a majority of the population is out of work. People can't pay rent. There's a lot of issues going on, and the market doesn't really seem to care. So for those unaware, the federal government has been printing, the Federal Reserve has been printing stimulus money, stimulus for the recovery of a lot of these big companies and small businesses, and that has been driving the stock market up regardless of all of the bad news. So I am patiently waiting to get in on this market, mostly from my long-term IRA or 401k account, whichever you have. I have an IRA, but I'm looking to get in on a long-term position. So if you are as well, then basically pay attention to this video and I'll explain to you what we're looking at here at the S&P 500. So this is the weekly time frame again. Right off the lows, we've been up 25%, and we're waiting for this bounce to basically have a top and start consolidating. Because right now we've had higher highs and higher lows for the last 3 weeks, and we haven't had any type of retracement or consolidation, which is price cooling down or basically going down a little bit for healthy measures, because it's unhealthy kind of for price to move up so much without any type of consolidation. So with that being said, I am waiting for this bounce to top out, and I'm going to be attempting to enter my long-term position on a weekly higher low. So I'm expecting this move ultimately to end in an equilibrium, to form an equilibrium. I don't think we're going to have a V-shaped recovery. So a V-shaped recovery is when you go straight from the lows back up to the top. So it looks like a V, like that. That would be a V-shaped recovery. I don't think we're going to get that. I think we're going to pull back and form some type of equilibrium where we find the low, and then a lower high, and then a higher low, and we go through this range for the rest of the year, possibly. So I'm going to enter on this weekly higher low, and until we see this bounce top out, then we're not going to get a chance to buy the dip. So the way we know that this bounce is going to top out, it could be topped out here. This could be the top of this bounce, but we're going to have to see on the daily time frame the bears show up and have a bearish daily trend change, and that will mark the top of the weekly bounce. And then we'll be looking for a weekly higher low above that 218 level. So until we get a bearish trend change on the daily time frame, not the weekly time frame, the daily time frame, then we won't know until this top is set. So with that being said, let me zoom in to the daily time frame and show you what we're working with. So basically from the lows, the bulls have a very strong case. They have the low, the high, and then they had a daily higher low here and went straight into a bullish trend change. And right now they're looking to do the exact same. And right now there is daily consolidation going. The way you know that is we've had 5 days in a row where we had higher lows and higher highs. We've broken that pattern, so now we're looking to retrace from here and look for a daily higher low above 243. So bulls, if they hold 243 and go up, then that weekly bounce is still going up. Nothing has changed. The bulls are still in control. On the other hand, if this bounce continues to go down tomorrow and possibly the next day, we find that higher low, and then we form a little lower high, and then we get a bearish trend change, then we can mark the top of that weekly bounce, and then we can look for that weekly higher low above 218. So if you are a bull in this market, then on this consolidation move, you're going to want to buy the dip. Anything above 243 would still be bullish and still keep the bulls in control. So I'm not entirely sure if you'd want to buy now, because the bulls can still drop 11% and still form that daily higher low and still technically be in an uptrend. So I would wait until price goes down, and then you can average down at a lower price. On the other hand, bulls can also set this daily higher low right here tomorrow if we don't see price continue to drop. So if price stays above 271 tomorrow and we break above this 277, then that daily higher low will be formed right there, and it'll just be a continuation, and that little dip would be the extent of that consolidation. So that would just be a very, very strong signal from the bulls if this one candle is the only bit of consolidation we get from this huge move. I would expect at least to get in some sort of equilibrium, or at least drop a little bit lower. So that is also the possibility tomorrow if we open up higher, that with just a continuation bounce and the daily trend stays bullish. So tomorrow, break of 271.44 keeps the consolidation going and looking for a higher low above 243.90. So if you are interested in keeping up with what's going on a more frequent level, then I'll invite you to go into the description below, or if you're watching on Instagram or a different platform, go on my bio and click the link to join the group. I'm growing the group. I've got about 25 people so far. The more the merrier. I would love you guys to join, so please join the Slack group. And I post a lot of stuff in there regarding technical analysis and charts and videos and stuff like that. So please join the group, and I'll see you guys next time.